Welcome to another deep dive. You know we love to get specific here, and today we're tackling a topic that you specifically requested. How to really understand that financial framework, the chart of accounts,
Yeah,
but with a focus on the construction world.
I think this will be a good one.
You know?
Yeah, you're in for a treat because it's kind of like
Yeah.
peeking behind the curtain at how a construction company's finances actually tick,
Yeah.
you know? And to really make this practical, we're going to be using a sample chart of accounts from Meritorious Consultants LLC,
Perfect.
which is a great real-world example.
So I'm picturing this chart of accounts like a blueprint, right?
Uh,
But instead of for a building, it's a blueprint for money.
oh, that's a great way to
Sure.
visualize it.
Where the money comes from, where it goes, what the company owns, what it owes.
Yeah, just like a blueprint.
Is that a decent analogy?
It has different sections for electrical, plumbing, structural elements. The chart of accounts breaks down all of the financial information into specific categories that help you understand the big picture.
Okay.
To really grasp it, we need to start with the foundation, the balance sheet, and the profit and loss statement.
So the balance sheet, that's like a snapshot in time.
All right, you got it.
It shows what the company owns, what it owes, the owner's stake.
Yeah. Think of assets as the tools and resources that a construction company uses
Right.
to operate. We're talking about cash, equipment, properties, and even those materials piled up on a job site waiting to be used.
Okay, and liabilities. Those are those looming bills, the money the company needs to pay out.
Exactly. It could be unpaid invoices to suppliers, that loan for the big excavator, or even salaries that haven't been paid yet.
Gotcha.
It's all about understanding what the company owes to others.
So then equity is what's left over after you subtract those liabilities from the assets.
Yeah.
That's the owner's piece of the pie.
That's the gist of it.
Okay.
It represents the value that belongs to the owners after all the debts are paid off. And it's a key indicator of the company's financial health and stability.
Gotcha.
Now, the profit and loss statement.
Yeah, that's more like a financial movie, right?
Precisely,
You
yeah.
get to see the action over a period of time.
The P&L, as it's often called, tracks all the money coming in, revenue, all the money going out,
Yeah,
expenses, and the difference between the two is
Yeah.
the profit or loss.
Got it. Let's start digging into some of the specifics of this Meritorious Consultants
Okay.
chart of accounts.
Yeah.
It starts with current assets,
Uh-huh.
things that a company expects to convert to cash pretty quickly.
Yeah.
What kind of things would fall under that category for a construction company?
Well, you've got the obvious one, cash on hand. Then there are those accounts receivable, the money clients owe for projects that have been completed or are in progress.
Makes sense. But then there's this interesting item
Yeah.
called inventory construction, WIP.
Ah, yes.
What's a WIP all about?
WIP stands for work in progress, and it's a crucial concept in construction accounting.
Okay.
Imagine you've got a project that's, say, halfway done. You've already purchased materials.
Okay.
You've paid for labor, but you haven't billed the client for the full amount yet.
Right. Because the project's not finished yet.
Exactly. Inventory construction, WIP, allows you to track
Okay.
the value of those resources that have already been invested in these ongoing projects.
Gotcha.
So it's recognizing that your company has funds tied up in a project
Right.
that will hopefully turn into revenue down the line.
That's pretty clever.
Yeah.
So it's a way to reflect the true value of what the company has in play at any given time.
It's all about recognizing the financial reality of ongoing work.
Okay, cool.
Now, let's move on to non-current assets, which are a bit different.
All right.
These are the things a construction company expects to hold on to for a while, like property and equipment.
Right. And I see they've got accumulated depreciation listed here.
Yes.
I'm guessing that's not as scary as it sounds.
Not at all. Think of it like this. That shiny new bulldozer you bought a few years ago. It's not going to be worth the same amount in 5 years.
Right.
Accumulated depreciation is how we account for that gradual decrease in value
Okay.
of those long-term assets over time
Yeah.
due to, wear and tear.
So it's just like acknowledging that even those big, tough assets have a limited lifespan.
It ensures that the balance sheet is showing a realistic picture
Right.
of the company's assets.
Okay.
Now, shall we flip over to the other side of the coin and look at liabilities?
Let's do it. So we got current liabilities, the debts that are due soon.
Mm-hmm.
It's probably a mix of things like bills to suppliers, short-term loans, that kind of thing.
You're on the right track. It's all about those immediate financial obligations
Okay.
that need to be taken care of promptly to keep the business running smoothly.
And then we have non-current liabilities,
Yes.
which are more like the long-term debts, right? Like a mortgage on an
Right.
office
Yeah.
building or maybe a big loan to buy a fleet of trucks.
Those are obligations that will be paid off gradually
Okay.
over a longer period.
Gotcha. Now, there's an interesting item I spotted in the current liability section that's quite specific to construction: retention.
Mm.
It shows up under both accounts payable and accounts receivable.
Ah,
Have you
yeah.
ever come across that term?
Yeah, it's a common practice in construction
Oh, okay.
where a small percentage of the payment
Okay.
is held back until project is fully completed and meets all the agreed upon standards.
Okay.
So under accounts payable, the construction company is holding back a portion of the payment
Okay.
to its subcontractors.
And under accounts receivable, their clients are holding back a portion of the payments to them.
Exactly.
Okay.
It's a way to incentivize everyone involved to deliver quality work
Right.
and make sure all the loose ends are tied up before the final payments are released.
Okay.
It can get a little...
It sounds like a smart way to manage risk
Yeah.
and just make sure that everybody stays accountable
Yeah.
throughout the project.
It is.
Okay, so I think we've laid a good foundation here
Yeah.
with assets and liabilities.
Mm-hmm.
Ready to move on to the revenue and expense side of things.
Absolutely.
See how those numbers play into the profit and loss statement.
Let's do it. Welcome back to our deep dive into the chart of accounts. It's amazing how much this seemingly simple document can reveal about a company's operations and financial health.
Yeah, I'm starting to see that. We've covered the basics of assets and liabilities, those building blocks of the balance sheet, but I'm really curious to explore how the profit and loss statement comes into play.
Absolutely. Let's shift our focus to the dynamic duo of revenue and expenses, the heart of the P&L.
Yep.
Revenue, of course, is the money coming in,
Right, the lifeblood of any business.
primarily from completed construction projects. But
Yeah.
looking at this chart of accounts for meritorious consultants,
Yeah.
it's not just a single line item for revenue. It's broken down into a lot more detail.
Right.
So what's the thinking behind that?
Yeah, why all the granularity?
It's all about getting granular. Instead of just lumping all the revenue together, this detailed breakdown allows you to track income from different types of construction work.
Wow.
Civil, plumbing, electrical, you name it. They even have separate lines for revenue from sale of villas and revenue from sale of buildings.
That's fascinating. So it highlights the potential for a construction company to have diverse income streams, not just from building structures, but maybe also developing and selling properties.
You're catching on quickly. This level of detail is incredibly valuable for analyzing which areas of the business are most profitable
Oh, yeah.
and identifying potential areas for growth.
Gotcha.
Imagine you're the owner of this company,
Yeah.
and you notice that revenue from plumbing projects has been steadily increasing, while revenue from civil projects has been kind of flatlining.
Oh, that would definitely raise a flag. Would it maybe indicate a need to shift resources or explore some new opportunities within the plumbing sector?
Precisely. Or maybe it's time to revamp your marketing strategy for civil projects or investigate why those projects aren't as lucrative as they used to be.
Right.
The chart of accounts gives you the data points to ask those critical questions.
Okay, so revenue is the exciting part, the money coming in. But then there's a flip side, expenses.
Right.
All those costs that are associated with running the business.
Yes.
And looking at this chart of accounts, there's a whole lot going on under that category.
That's the reality of construction. It's a complex industry with a wide range of costs, from direct costs like materials and labor to indirect costs like office rent, insurance, and even fuel and lubricant expenses for all those trucks and heavy equipment.
It really highlights that profitability isn't just about bringing in revenue. It's about managing those expenses carefully.
Couldn't have said it better myself.
Yeah.
Now, this chart of accounts goes a step further and breaks down those expenses into these specific subcategories. You see categories like direct costs, construction overheads, marketing and sales expenses, and even general and administrative expenses.
It's like they're dissecting the financial anatomy of the business.
Think of it as financial detective work. By meticulously tracking expenses in all these subcategories, you can pinpoint areas where costs might be getting out of control.
Okay.
Maybe those fuel costs have spiked because of rising gas prices, or perhaps those marketing campaigns aren't generating a good return on investment.
Right.
The chart of accounts helps you identify these issues
Yeah.
and take corrective action before they eat into your profits.
So it's like having a financial magnifying glass to zoom in on specific areas and see where those dollars are really going.
Exactly. Now, there's one more area of the P&L I want to touch on, other income loss. This is where you capture those financial activities that are outside the core construction operation.
Okay, what kind of things would fall under that?
It could be things like interest income earned on cash balances, rental income from a property the company owns, or even gains or losses from the sale of assets,
Okay.
like that old crane they finally decided to replace.
So it's kind of like a catch-all category for those financial activities that don't fit neatly into the revenue or the expense bucket, but it's still important to track because it contributes to the overall picture, right?
Absolutely. It's all about having a complete and accurate view of all the financial inflows and outflows, even those that aren't directly tied to construction projects.
This deep dive is really giving me a new appreciation for how all these pieces of the financial puzzle fit together.
Yeah.
But we're not just analyzing historical data, right? We can also use this information to make projections about the future.
That's where the real power of the chart of accounts comes in.
Okay.
By analyzing past performance, you can make informed decisions about future investments, pricing strategies, and even whether to expand into new markets or take on different types of projects.
Give me an example.
Okay, let's say the owner of this construction company is considering buying a new piece of equipment, a fancy new excavator.
Okay.
Well, by looking at their historical revenue from similar projects, their expenses related to equipment maintenance and depreciation, and even their current debt load, they can build a financial model to project the potential return on investment for that new excavator.
Okay.
It's not just about whether they can afford the excavator right now, but whether it will ultimately boost their profitability in the long run.
So it's like using the past to predict the future.
Precisely. And the chart of accounts provides the data points to make those predictions more accurate and data-driven.
This is fascinating. It's like the chart of accounts is the financial compass that guides a construction company's journey.
Yeah.
But I'm wondering if this system is only relevant to construction or if these principles apply to other industries as well.
That's a great question. The beauty of a well-designed chart of accounts is its adaptability. The core principles are applicable across a wide range of businesses, from software companies to retail stores to healthcare providers.
Okay.
It's all about tailoring the specific accounts to reflect the unique nature of each industry.
So instead of tracking revenue by type of construction work, a software company might track revenue by software licenses sold, subscription fees, or consulting services.
Exactly. And their expenses might be categorized by research and development, marketing campaigns, or customer support.
Gotcha.
The specifics change, but the underlying framework of using a chart of accounts to organize financial data, track performance, and make informed decisions remains the same.
Okay, so it's a universal language of business finance.
Yeah.
But I'm curious, are there any potential downsides to relying so heavily on a chart of accounts? Could it become too rigid or restrictive?
It's a valid concern. A poorly designed or overly complex chart of accounts can actually hinder a company's ability to get a clear picture of its financial health. It's about finding that sweet spot between structure and flexibility, providing enough detail to be useful without getting bogged down in unnecessary complexity.
So it's not just about having a chart of accounts.
Right.
It's about having a well-designed and thoughtfully maintained one.
You got it. It's like any tool. It's only as effective as the person using it.
Right.
But when used correctly, it can be a powerful asset for any business.
I'm really starting to see that. Now, we've talked about using this historical data for analysis and forecasting, but I'm curious about how technology is changing the game in the world of financial management.
Uh-huh.
Is there anything in the world of construction tech that relates to this topic?
That's a fantastic segue. We've explored the past and present of the chart of accounts, but let's take a peek into the future and see how technology is transforming the way we manage and analyze financial data.
Okay.
Ready for a time jump?
Oh, I think I'm ready for a time jump. We've journeyed from the foundations of the chart of accounts to its role in financial analysis and forecasting, and now ready to see how technology is shaping the future of this essential tool.
All right, fasten your seatbelts. Remember those days of dusty ledgers and painstaking manual entries? Well, technology has revolutionized financial management, especially in the construction world.
Yeah, I can't imagine trying to keep track of all those moving parts in a construction project with just pen and paper. So much room for error.
Absolutely. That's where construction-specific accounting software comes in.
Okay.
These sophisticated platforms automate so much the process, from generating invoices and tracking expenses to reconciling bank statements. It's like having a virtual accounting department at your fingertips.
Okay, so that sounds like a huge time saver, but it's more than just automation, right? What other advantages does technology bring to the table?
Imagine this. You're managing a massive construction project with multiple phases, subcontractors, and a mountain of expenses. With project accounting software, you can track costs and revenue for each phase, monitor the performance of each subcontractor, and even generate real-time reports on the overall profitability of the project. It's like having X-ray vision into the financial workings of the project.
Wow, that's powerful. So you can identify potential problems early on before they turn into major financial setbacks.
Exactly. Let's say material costs for a particular phase are exceeding the budget. With these real-time insights, you can investigate the issue, negotiate with suppliers, or adjust the project plan to mitigate the impact on your bottom line.
So it sounds like this technology really empowers those construction companies to be much more proactive in managing their finances.
Precisely. And it's not just about individual projects. A lot of these software platforms integrate with other business systems like CRM or project management tools to create a centralized hub for all your critical data.
Okay, so you can actually see how marketing campaigns are translating into new projects, or how efficiently your teams are completing tasks and staying on schedule. It's like connecting the dots between all those different aspects of the business.
Exactly. And as AI and machine learning continue to advance, we can expect even more sophisticated tools for financial analysis, risk assessment, and forecasting.
Wow.
Imagine algorithms that can actually predict potential cost overruns or identify areas where you can optimize spending.
It sounds like the future of financial management is all about these data-driven insights and predictive modeling.
It is, and that's where the chart of accounts, despite all this technological advancement, remains absolutely critical. It's the foundation that makes all of this possible. By providing a structured and standardized way to categorize financial information, the chart of accounts allows these technology platforms to do their magic.
So even in this high-tech world, the chart of accounts is still the language that allows us, humans and machines, to communicate about finance.
That's a brilliant analogy. It's the bedrock upon which we build these sophisticated financial systems.
This has been an incredible deep dive. We explored the chart of accounts from its historical roots to its crucial role in modern construction finance, and even took a peek into the future alongside cutting-edge technology.
It's been a pleasure diving into this topic with you. Understanding the chart of accounts empowers anyone involved in the construction industry, from project managers to investors, to make informed decisions and navigate the complexities of this dynamic field.
As a final thought for our listeners, I'd encourage you to consider how the principles we've discussed today can be applied beyond construction. Whether you're running a tech startup, managing a restaurant, or even just trying to get a better grasp on your personal finances, the Chart of Accounts framework can provide valuable insights and guide you toward financial success. Keep exploring, keep learning, and keep asking those critical questions. Until next time, happy diving.